Okay, now we are talking about the interest that we are paying on July. So read the question carefully. It says, also assume that all borrowing are effective at the beginning of the month and all repayments are made at the end of the month of the repayment. Interest is compounded and added to the outstanding balance each month, but interest is paid only at the end of the month when the principal is repaid. The interest the rate is 9% and the other things. So when do we get the loan? On June. And how much do we get? $65,000. And the question says all the borrowing are effective at the beginning of the month. So at the beginning of the June, we have 65,000 of borrowing. For the June, we are have the interest rate by 9%, not 90%. And since then the rate is for 1 year, we have to divide it by 12 to find out the rate for the find the interest that we have to pay for the June. So 65,000 multiplied by 9% divided by 12. So that's what I owe as an interest. But do I pay anything on the June as interest? No, we haven't paid anything on the June. So during the July, because the question says that we are paying every repayment happened at the end of the month, so we have to calculate the interest rate for the July as well. So how much money do we have outstanding here? 65,000 plus the interest of the last month multiplied by again 9% multiplied by 1 over 12. That's the interest that I have to pay during the July. So 491. So what's the total number that I'm going to pay? Will be the summation of those two as an interest. So I will pay 491 in plus 487 point is 978, which we have to round it to the nearest integer. So it's I will pay 979 as the interest. So remember, when you borrow the money, the first payment is including two interests. The interest for the first month, the month that you borrow the money, and the second interest happening during the second month that you start repaying the loan. So now we have that number down here. We didn't buy any furniture. Now you have to sum over everything here. 190,599,900, 107,11, 549,00, 879. So 32,921. 32,921. So your net cash is positive this time. And you had $600 more as well. Like 600, 33,521, 33,521. Now you can make a payment, so you don't borrow anything. You can make a payment for the next month, and that payment is whatever you have here. You will pay as much as you can because you don't want to pay the interest. So I can pay 33,000. Some budgeting next month, and I will be 521 over. Sorry, this will be the total cash flow financing, which is paying 33,000. And if you sum over everything, your money at the end will be $521 from here and $4,000 from there. 4,521. Okay. So I won't explain everything on the last column because it's the same of the previous one, but I will explain the interest rate here as well again. If you have trouble finding the numbers, let's go back to the previous video where we calculate the first column. 700 for 900 0, and now we have to calculate the interest rate. So calculating the interest rate, well, how much money left for us in the borrowing and financing? So we financed 65,000, we repay 33,000, and if you are thinking about what happened to the interest, so we are already paid the interest. Now it left 22,000, and now at the beginning of the August you owe the system, the bank, or wherever you borrow the money, 22,000. And 22,000 this time it's just multiplied by 9% and divided by 12 to find out the interest rate that you have to pay this month. So 22,000 multiplied by 9% and divided by 12. I made a mistake here. Yes, I did a mistake here because 65,000 minus 33,000, it's not 22, it's 32. So 32,000 multiplied by 9 divided by 12 is 240. Now you just sum over everything, you're getting this much of money into the system, 521 from the beginning of the month. 0, how much do you repay this month? This month you have 22,000 to repay. You paid the 22,000, you end up with 4,981. That's it for this part. Now you have to calculate the budgeted income statement for the system. So for the June, you have $240,000 sales. The cost of goods is 63% of the sales, which is 151 and 200. You have calculated beforehand. And your profit, if I can find the calculator, so it's 151 and 2, 88,800. Salary wage, we already calculate everything over here. So you just put those numbers back in the equation. So 57,600, rent and other fixed cost 9,000, variable cost 7,200, and depreciation 1,000. So the total is 74,800, and the income, or the income from income from operations, is $40,000. The interest that we paid, interest expenses during the June, if you go back to the calculation that we had for that, you will find 488, and as a result our net income is 512. So that's the third part of the video.